Hi there, my name is Rennie H. Jurgensen. I am the CEO and founder of Coinbands. In this video, I'm going to talk about how to invest in cryptocurrencies. And I'm going to do this in a very specific way. I've laid out 7 steps that I think are critical to understanding how crypto investing works and also are critical to gaining success in your crypto investing. And I'm going to go through them quick in this video, but I'm also going to add individual videos later on each topic. So let's start from the beginning. Let's just start with risk. First step is risk. We need to talk about risk because that is really a critical element when you invest in crypto. And the study shows that 8 in 10 people, 80% actually lose money in crypto. So of course that's difficult to understand when you enter a bull market. Everybody's talking about their gains, but if you don't cash out at the right time, if you don't have a good exit strategy, if you don't know how to take profits, it can all be lost again. So there's a lot to learn here. And also let's just remind ourselves of the 10,000 hour rule. How to learn anything, become an expert is about 10,000 hours if you read the book, and that's about 4 or 5 years, so it does take a little bit of time to learn. And that we can see if we go to the second step, which is strategy. Really, you need to have a good strategy that is gonna help you gain and reach your goal, right? So your risk tolerance defines who you are as an investor and how much money can you afford to lose. Are you younger? You can lose more. Are you old? Is this your retirement? You have to be more safe, right? So should you invest aggressively or should you be more defensive, more conservative? That all depends on your risk tolerance. But then the second part comes down to your strategy. So what's your strategy? And here again, let's talk about the risk. Risk is really that 97% of day traders. If you're trading daily, you're gonna lose money. This is the same. It's the same in crypto. It's also stocks, bonds. Everybody who's day trading, they lose money. And over time, there's plenty of studies on this. The longer you trade, the more you lose. So the only way is really either to hodl, to hold on to it. If you've got blue coins, blue chip cryptos, if you've got Bitcoin and you're holding it, that's actually better than trying to trade it. But you can also do what's called dollar cost averaging. So each month you put a fee in, you put an amount in. You can have a monthly payment plan, or you can just stick to your plan and keep adding money, even if it's up or down. Over time, you're actually going to gain a lot more than if you were trading. And then there's the second thing, which is really what I'm into, what I promote, what we do at Coinbase is really buy the dip, right? That's a very simple strategy. Is you buy cheap and you sell high. So that's with any business, any product. You buy cheap and then you sell at a higher price and then you have a profit. This is a very simple business strategy, and it's a very simple trading strategy that's simple in its strategy, but it's a little bit more complicated in implementing it. Because now we have the third step, which is crypto cycles. And that's really crucial to understand. In order to gain success and have a successful strategy in your trading, you need to understand crypto cycles. So crypto, it's a little bit more, it's a little bit more technical and difficult for some people. If you're an older generation, if you're the young, maybe you have a natural inclination here. But it is really, even though it's technical, crypto follows the same psychology, human emotions as the regular stock market. So therefore, we need to understand how these cycles evolve and how they actually fit together. So we have the normal microcycle. The macro cycle is about 8 to 10 years. So we'll have 7 to 10 years boom, and then we'll have a correction. We'll have a recession for 2 to 3 years, and that's the correction. Then we come back to a new cycle, right? So we've just had a correction in the macro, and now we're getting towards the summer where maybe the Fed will start easing again, and then we'll have more liquidity, and then we're into a boom again. So we're just at the beginning of a probably 7 to 10 year cycle, which is going to be very good for investment. But in crypto, we need to understand it's a little bit more different. Crypto cycles are 4-year cycles. They're not 8 to 10 years. They're 4-year cycles, and that's based on what's called the Bitcoin halving. So this is basically where crypto miners, Bitcoin miners, they get paid for their efforts, for their work. They get paid in Bitcoin, and the amount of Bitcoin they receive for the mining is cut in half every 4 years. And because a lot of these Bitcoin miners, they didn't sell their Bitcoin when they received them, and the market floods with Bitcoin. When this amount is cut in half, that means there's less supply, and therefore the demand goes up, and that's why you have a bull market right after the halving. But this year's different. 2024, we actually saw a new all-time high for Bitcoin in March, and we haven't reached the halving yet, which is going to be in April, mid to end April is predicted. So this is a new situation, but still we should probably go back to the fundamentals, which tells us that it's about a 4-year cycle. This may change in the future because now we're getting with the EFTs. Everything is going to be mixed, and we're going to have to see if there are new patterns. That's something that's important to be aware of. What are the patterns? What are the cycles the crypto cycle, the 4-year cycle, how does it play together with the macro cycle? These are really the most important elements to understand, because that way you can do what really is the strategy that we promote at Coinbase, which is buy the dip, right? So this is really buy cheap and you sell high. So the whole idea here is to buy the best coins cheaper, right? So you had the all-time low for Bitcoin was last time, and that was October 22. We had Bitcoin at 15,800, and we had Solana, which I bought heavily, at $8. Imagine buying today when you hear this message. Imagine when you see the top of where Solana is going to go, you bought it at $8, right? That's really what you want to do. You want to buy the best coins when they dip, when they hit the new all-time lows, and then you want to ride that up all the way to the top and sell it at the most expensive price. That's a very simple strategy. That's what we recommend. And also we could see some of the big investors. Warren Buffett is quoted for saying that what the wise do in the beginning, the fool does at the end. And that's really what these cycles, these crypto cycles tell us, that the wise person buys the dip and then he rides it all the way up till the middle or the top of the market, when the fool enters and buys it when it's way too expensive, and that's our time to get out, because that's what you do when you're a wise trader, right? And that's the same in crypto. Then we also have something called, that is the 5th step here, which is called predicting narratives and trends, because that's very important. Same thing we have in regular stocks. We have tech stocks are high. We got the Magnificent Seven, right? Tech stocks are very popular right now, and they're really showing strong gains. And in the same way within crypto, we have certain narratives that are gaining more than other narratives, and these are the trends we need to pick out and understand. And if we look at last year, the top narrative last year was, predictably AI, and number 2 was GameFi. So games in the Web3 space. But obviously, AI number 1, the top trend, is no surprise, because we all know the news. Everybody's since ChatGPT, and now we're talking about Google's Gemini, and everything is AI in the media. And of course, that narrative that spills over into crypto as well. So that's why, if you buy heavy, if you invest in strong AI projects, that is pretty sure, that's guaranteed, that's going to be a good gain in the coming bull market that we're now in, right? So this is very important to understand some of the narratives. Some of the newer narratives coming up is real world assets, right? So blockchain, putting everything on the blockchain, those are some of the things that are going to be, they're coming up here in 24, and they're going to be maybe bigger in 25 and 26, right? So being aware of the narratives and the trends and investing in those, that's another thing, that's another strategy that's going to really increase your crypto gains. And then the 6th step is really understanding how to take profits. You have to have a strategy for when to take profits. So again, what type of investor are you? What is your goal? Are you conservative? Are you going to be more defensive? Or are you more young and you can be more aggressive? But even if you're aggressive, buying the dip, aggressively buy the dip, Solana at $8, yes, let's be aggressive, because that's a good price. We know it's going to go up, so let's be aggressive. But once we hit the middle of the bull run, now we have to start being defensive. Now we have to see, okay, where is this cycle? What cycle are we in this time? There's a lot of predictions. People talk about a super cycle, but there's no guarantee. This could also be a shorter cycle, because we had a new all-time high for Bitcoin before the halving. So does that mean the cycle is shorter, or are we in a super cycle, or is it going to be a normal cycle? Those are really important considerations to have in, because you might want to start taking some of your profits out. Some of your gains are 25%, maybe half in a normal cycle. So a normal cycle will be 3 years. The cycle is 4 years, but we have 3 years with a accumulation and then into a bull run. So you might want to take out maybe 2 years in, so you're safe, right? So this is all about your strategy, and those are really important things to consider when you invest. And this is something we can surely help you with here at Coinbase for sure. And then once you have taken your profits, now you need to figure out, what is your exit strategy? So what are you going to do with the money? Are you going to take it and reinvest it into the next bull run? So you got a 10x, you got maybe a 15 or 20x. You're going to take those profits and then wait till 28. Actually, you have to accumulate and start buying in 26, 27. And then when we have the next bull run in 28, 29, are you then going to maximize, really get another 10, 15x of your profits, right? That's one strategy. You could also say, now I'm ready to cash out, or you could use it as a, asset protection. There are plenty of ways we can help you. We can set you up in offshore accounts, offshore banks that trade with crypto. You can do your own thing, and we can really help you do this. But this is some considerations. Or is this your retirement? Are you going to put the money in for your kids in the future? Those are considerations to think about before you start, because your exit strategy is really your goal of your investing, and that comes back to your risk tolerance and your strategy that we began with in step 1 and 2. So it's all connected in that way. So that's it for this video. I'm going to do individual videos on each topic to dig deeper so you can really understand each topic, because each step here that I've laid out is really critical to understanding how crypto investing works, but also how to become successful in your crypto investing, because that's really the goal. Thank you. That's it for now.